having maybe taxation conversation to be boring and serious. So I like it to be fun and as jovial as possible, because if it gets so serious, then I think we'll be going contrary to what I normally stand for when it comes to taxation. So I like it to be very simple and fun, so that and also very simple and straight to the point, so that we can be able to have fun as well as learn as much as possible. So I'd like to dive in straight to the presentation of the day. And I normally like beginning from the basic of the basic. Would want to know what tax is, how we operate, and also um, the importance of paying tax, because now once we get to understand the importance of paying tax, then we'll be able to appreciate why we pay tax, and also why KRA is here just to facilitate us to even pay the taxes. So basically, tax is usually referred to as a compulsory payment made to the government just to cover the general government services and activities, name it, be it health, education, development, and whatnot. Yeah, the importance of paying tax is just to provide the citizens with the necessary good services, and also for the development of its economy. So, by that definition, we'll be able to even appreciate why we pay taxes. And then also, you'd ask yourself, is taxation legal? Yes, it is very legal, because we operate within the law, and we are normally guided by the various acts that we have. We have the Income Tax Act, we have the VAT Act, we have excise duty, and also the Tax Procedures Act, which is very, very important, especially for our taxpayers. The Tax Procedures Act, because it spells out your rights, you as a taxpayer, on how to go about issues whenever you have issues to do with SLA, that is the service level agreement, at what point, and also within what time are you supposed to be served. Let's say, for example, you are seeking a service, and you are being served, and it's taking a bit longer than you expected. So what are these service level agreement at the time that you're supposed to be served? So that falls in under your right as a taxpayer. You're supposed to be given good service and within the right timelines, so that you can be able to be facilitated to the fullest. And that is why we are here, just to educate you on even your rights as a taxpayer, on what to do whenever it comes to provision of services to taxpayers. So now, when it comes to the business, because I believe most of us on call right now are women in business. You are there, you're in business. What are you supposed to be doing? Because I normally say, when I have this session, once you get it right, once you are working in this journey of you being a compliant taxpayer, you will get it right from the basic of the basic, and that will be from the word go, from the time you're being registered up to now the time you're being rendered as a compliant taxpayer. Because you being rendered as a compliant taxpayer will start from the basic. When you get it right from registration, you will get it right all through. But when you get it wrong from registration, then you'll be having a very hard time to even walk in that journey, or you as a taxpayer. Up to the time now, we render you as a compliant taxpayer. And that is why we are here, and we normally conduct, especially I like inviting newly registered taxpayers so that we can work with them through this journey of being compliant from the word go, from the time that they are being registered up to now, the time they are being rendered as compliant taxpayers. So I believe probably in this call, probably you are a newly registered taxpayer, or you have been there, but now you're stuck somewhere, and also you want to be updated on the latest issues that are happening. So no worries, this session is also for you, because now we'll be able even to correct the past mistakes that probably could have happened, and now going forward you will be knowing the right step that you'll be going in when you're working in this journey of you being a compliant taxpayer. So on the screen I'm just displaying a tax cycle. I normally like calling it journey, the journey of a taxpayer. And the journey of a taxpayer normally begins when you are registered. So right from the word go, the time now you want to venture probably into a business, then you go and register yourself, because you can opt to operate your business either as a sole proprietor or as a limited company or a partnership. So once you have decided on the way forward, on how you want to transact your business, then you go ahead and register yourself. Probably you would walk into a Duma Center and go to BRS, that is the Registrar of Businesses and Companies. Then you register yourself. So if you're a sole proprietor, then you'll be registered and you'll be given a business name, where this business name is the one which is will be linked to your PIN number, and then now you operate as a sole proprietor. And then now, if it's a limited company, then you'll go ahead and register your company as well as a partnership. So a partnership is where two or three people will come together just for the sake of doing business. So once you're done with that, then the most important thing now is for you now to, according to the nature of your business, to choose uh, or be guided on the type of obligation that you'll be transacting with. Let's say, for example, we have different obligations that you'll be given to you. I don't know if at all you have been keen to just check your PIN certificate, and you'll be able to see right at the bottom of it, there's an obligation. Normally, it comes as a default obligation, which is income tax resident, if now you're a Kenyan. So in addition to that, there are other obligations depending on the nature of your business, and that will be the MRI, that is the monthly rental income, for those who are property owners or landlords. And then we also have excess duty, that is for the ones who are dealing with accessible goods. And the most common example that I like using is the water bottling business. And then also um, we have VAT for those who are in big business, and of course with the threshold of 5 million and above. And then that will be for VAT. And then also there's a turnover tax. Turnover tax is for the small businesses or the startups that are coming up, and the threshold is usually um, uh, between 1 million to 25 million. And then also, so I've mentioned TOT, that is turnover tax, VAT. I've mentioned excess duty, and also pay as you earn if at all you're an employer. So depending on the nature of business that you're having, then you should be able to be guided accordingly on the type of obligation that you'll be assigned for. So once you're done with the assignment of obligation, then the next thing for you is just for you to go ahead and file your return. So you'll be filing your return according to the obligation that you've been given. So VAT, turnover tax, excess duty, um, pay as you earn, and also MRI. Those ones you'll be required to file your return on a monthly basis. And then now for the corporation tax, that is the company, partnership, and the income tax, resident individual for Kenyans, then you'll be required to file your return on an annual basis. So it's very important for you to be able to know which kind of obligation am I supposed to be filing on a monthly, and also which kind of obligation I'm supposed to be filing on an annual basis, so that you don't get caught unawares, and it's an oops kind of a moment where now you're wondering, probably I didn't have this information prior to this, and now you'll be bombarded with hefty penalties and interests. And that is why it is important for you just to know your obligation prior to you filing your return. So once you're done with the obligation, file your return according to the obligation. And then after that, you're now supposed to be, the next step is for you to now pay your taxes as they fall due. So whenever it comes to filing of returns, I normally like giving this particular scenario because you're always looking forward to an outcome. So don't just go ahead and file your return without any sort of an outcome or knowledge that you're anticipating. So whenever you're filing a return, I normally like using this example because that is now where most people get it wrong. And now there are normally three outcomes whenever you're filing a return. Outcome number one, if you're not transacted anything in that particular year or in that particular month, then the outcome would be you'll be filing a nil return. So just basically zero, and you're done with. And then now, outcome number two, when you're filing a return and you're using the Excel sheet, then you would file the zero. And then whenever you have at the bottom of the Excel sheet, on the tax computation page, and there's a positive figure, so let's say positive 5,000, then you know that is tax which is due and payable. And then if it's a negative figure, then just know that you're at a loss, or you have to be refunded some amount of money, because what we normally say as KRA, when it comes to taxation, you only get to pay the correct amount, nothing more, nothing less. So if it's a negative figure, it's a refund, then you go ahead and apply for the refund. If it's a positive figure, then you'll go ahead and make the payment. So I hope that is clear with us. So the next time you're going to file your return, be very keen on the outcome, so that it doesn't bring you a great or a huge positive figure, which now you're supposed to be filing, and then you go ahead and submit that kind of return, and then you are like, now you're supposed to be making payment, and someone from, or maybe your account manager is calling you to make the payment, and you're like, I didn't know I was supposed to pay. And then you get caught up in some kind of situation whereby you are now supposed to make the payment, and probably you didn't know. And so I hope you are seeing that kind of a scenario. So I hope that is okay. So whenever there's taxes due, you go ahead and make the payment, and then the final process is just for you to go ahead and deal with matters that are arising. And the matters that are arising will be now probably you going ahead to make application for your refund, or probably if you have an additional assessment, you'll go ahead and now probably launch an objection, because again, with the Tax Procedures Act, you should be knowing your rights. Whenever you have been assessed and you're not agreeable with the assessment, then it is your right as a taxpayer to go ahead and launch an objection and say, wait a minute, I don't agree with this kind of assessment. I'm launching an objection. Then we can sit down and discuss and probably get a way forward from that kind of um, objection. So I hope that is okay. Normally, when it comes to taxation, you normally have direct taxes and indirect taxes, and the direct taxes would come in as income tax, the income tax individual, and then the corporation tax for limited companies, and then we also have pay as you earn for we have pay as you earn for employers, and then we also have the capital gains tax. So whenever you have probably sold a property or shares, then you are supposed to now be able to go ahead and pay your CGT, that is the capital gains tax. And then, of course, we have the turnover tax and also rental income, and also advance tax for the guys who have commercial vehicles. And I think we're going to talk about that later in this presentation. And then also we have indirect taxes, which will come in as the value added tax and also excess duty. But now I can see here eTIMS, but eTIMS is not a tax. It is just a way of generating invoices. And then also we are going to talk about that later in this presentation. So now, when it comes to sources of income, of course, there are various sources of income in Kenya, at least in Kenya, and this will fall under business, and then also employment income for those who are employed directly. And then also we have rental income, and then also investment income in terms of dividends and interest for those guys who are into money market funds, and and also in cooperative circles, you are investing there. Then that is now also a way of earning income, because whenever you receive that dividend or interest from money market fund, then that is also a way of earning your income. Then, of course, we have pension for our sisters and brothers who have retired. Also, that is also a source of income. And then also we have income from the digital economy, that is a digital marketplace, capital gains whenever you get to sell your property or shares, and then also natural resources income, and then also gains from financial derivatives, including those in the Nairobi Stocks Exchange. Yeah, so when it comes to now business income, these are just some of the rules that apply when it comes to income. There's normally no consolidation of income, meaning you really have to specify your sources of income, and I think I should be able to be demonstrating that towards the end of my presentation. And by this, I mean, whenever it comes to business, there's the business income, there's farming income, there's rental income, there's interest, and also so those are the kinds of income that would be deemed as business, and you're not supposed to consolidate all of them. And also commission, you're supposed to clearly be indicating the specific incomes that you're earning, but I should be able to demonstrate that as well from the Excel sheet whenever now you're getting to file your return. And then also losses generating from one specific income source can only be deducted for future profits of the same source. For example, losses from business um, cannot reduce the taxable amount of a person's rental income. So I should be able to be demonstrating that as well in the Excel sheet. So there's a way you're supposed now to be separating all your incomes, if at all you are earning maybe from farming, business, commissions, interest, as well as rental income. And then each specified income must have its own specified account and tax computation. I should be able to um, demonstrate that as well. And then now, when it comes to expenses, expenses should be wholly and exclusively incurred for the nature, for the generation of your business. And then again, this is now the elephant in the room, and I think most of us are here because of this. If at all you've had the common validation of income and expenses, which was a public notice which was announced in November, October, November, thereabout of 2025, that now going forward will be, you should be able to be validating your expenses against TIMS and eTIMS invoices. And now that is one of the emerging issues, and also I'm going to be talking about it later in this presentation. So Section 23A of the Income Tax Act, and also Section 15 and 16 of the Income Tax Act brings it very clearly on the expenses that you're supposed to be claiming, and also the allowable deductions that you're supposed to be claiming whenever you're filing a business income. So these expenses should be wholly and exclusively incurred in the generation of your business. What do I mean by this? So let's say, for example, and I like they are using this example because it's very simple and up to the point. Um, and let's say, for example, you have a business that you're purely venturing yourself in selling of, let's say, for example, computer and computer accessories. Okay. And then now you are going ahead to maybe claim expenses such as diapers, for example. I mean, we normally have a funny moment whenever we are seated in our offices, right after taxpayers have already filed their returns, and we'd be because now what happens after taxpayers have filed their returns is that we'd normally get to sit down and get to review how each and every taxpayer has filed. And one of the issues that normally occur, or one of the common mistakes that people or taxpayers make, is usually claiming expenses which are not wholly and exclusively generate incurred for the generation of that business. So whenever you get to put in your personal expense, and you want to claim it now in your business expense, then it comes in as a shocker to us, because now that is not allowed, even as per the act. So those are just maybe some of the common mistakes that people normally get to make when it comes to now filing of their returns, because even with the validation of income and expenses, it came about because now from our end we were losing a lot of taxes because of this. And why is that? Because that is usually comes in as a way of tax evasion, because tax evasion is very simple. It is not rocket science, and it's not something that you really have to think about it so much, because one of the ways you can easily avoid paying taxes or reducing your liability tax or tax payable is just by you inflating your expenses or your overhead, and under declaring your expense, your income. So when you under declare your income and really inflate expenses, that will just be it. That is just one of the simplest way of you getting to um, get away with probably tax evasion, and that is why we came about with the issues of expenses, a validation of your income and expenses against teams and eTIMS, so that we can be able also to really control the amount of expenses that you're claiming, so that you can also be able to just also pay the correct amount of taxes, which is due and payable on your side. And also, Section 23A clearly spells out that the expenses that you're supposed to be claiming are also supposed to be teams and e-teams are transmitted. And even with that, if at all you have tried to um, you if at all lately you have tried to file your return as a business person, we came out with this brilliant idea of the integrated iTax, the integrated iTax portal, whereby all the uh, all your income and all your expenses or your purchases are being transmitted in real time on the integrated iTax portal. So if at all you've interacted with your iTax portal lately, then you should be able to see, and that has made filing quite easy. It's now very easy because now all the data has been populated for you. Yours is just to pick up the figures and go ahead and file your return in the most simplest way possible. So again, we have the issues of installment taxes, and installment taxes came by just to reduce the burden of our taxpayers whenever it comes to payment of your taxes at the end of the financial year. So this one came about because most businesses would complain about cash flow. Cash flow, it would be really a big issue, especially for a business person. And whenever, let's say, for example, you file a return and you get to make, and at the end of the computation, you're supposed to probably make a payment of 2 million, for example. And in that particular time is the time now your cash flow is really, really on the lower side. Then installment taxes will be good for you, especially and this one applies for the taxpayers who get to make payments of 40,000 in a given year at the end of the financial year when you're done with your taxes. So if you fall into this category and you get to pay probably 40,000 in a year, then it will be good for you to be making payments bit by bit in installment. And the first installment is usually on the because we have the installments run 4 times in a given year, and the first installment is usually on the 20th of April. And so we have April, we have June, and also we have September, and also in December. So what basically this means, you'll get to spread out your payments. For example, you'll get to predict what you're supposed to pay at the end of the financial year. Then you now apportion or partition them into 4 times in that given year, and then now you'll get to pay now in advance, so that when now it comes to the final return when you're filing, you'll get to be paying a very small amount of money, which is now called the balance of tax, at the end of the time now you're getting to now submit your final return. And the payments that you've been making, they don't go in vain, because now they get to reduce the amount which is payable by a very, very significant amount of money that you're supposed to be paying at the end of the financial year. So now, when it comes to withholding taxes, and this is where a very big misconception usually comes in whenever it comes to withholding taxes, because there's normally this misconception that withholding tax is final. Yes, so I can say there are some instances where withholding tax will be deemed as final, and there are other instances where withholding tax will not be deemed as a final tax. So, for example, for the guys who are into professional management, they get they get to earn their monies through management or professional fee. Those are the consultants. Then we have those who earn their monies through royalties, interest, and also insurance. There's commissions for insurance commission, um, marketing and advertising, sales promotion. Then these guys, the withholding is not deemed as final. So what you're supposed to do, you're supposed to um, um, declare at the end of the year. You're supposed to declare the income and then offset it with the amount which has been withheld, and also, and then now do your expenses again. eTIMS comes in handy here. eTIMS and TIMS invoices comes in handy, and then now you should be now able to submit your return. So when it comes to qualifying dividends, interest, and also for the non-resident, if you're a non-Kenyan, then your withholding will be deemed as final. And then we have also this particular tax called the advance tax. Advance tax usually applies for commercial vehicles. So if at all you have a canter, a tipper, a lorry, or a pickup, or even a matatu, a be it 14-seater or 36-seater matatu, then you're supposed now to be paying this particular tax called advance tax, and usually payable on or before 20th of the first month, that is January. So on or before 20th of January, then you ought to have made payment for advance tax for that particular commercial vehicle that you're running. Again, it is not a final tax, because now we are all aware that probably if you have a canter or a tipper, it is not used for going to church at the end on Sundays. Um, you use it for going to church, or an outing maybe on a Sunday. We all know probably a lorry or a tipper is a commercial vehicle. It is used to carry goods, probably goods, or even in the Western region, the most kind of the common type of business that is used for this particular kind of vehicles is for carrying soil for the guys who live there. I know you'd be familiar with that kind of soil whenever, especially whenever there's this business for gold mining. So once you paid your advance tax, then you're supposed now to declare the income that the commercial vehicle has been doing, and then of course you have to offset your income with eTIMS generated receipts. Again, eTIMS comes in handy. Then again, you'd be now able to submit your return in that order. So for the employment income, of course, you will have your allowable deductions, your gratuity and pension contributions. You'll have other allowable deductions of SHIF, that is the social health fund, and also your relief and also the housing levy. So that's pretty much it for the employment income, and also for the employment income that comes in quite easily, because the only thing you're supposed to be getting is just the P9 from your employer, and you'll be able now to file your return in that manner. And talking about just to talk about employment income, it has been simplified further, because now if you're an employee, you'll just have to file using employment income only option, where you'll be able to now be getting your pre-filled return with everything on it. So we are moving away from the hassle of getting to know from your P9 form what goes where, which figure goes where. Now we are moving away from that, and now we have the newly pre-filled return, where now we've already gotten data from your employer, what has been paid, what has been deducted throughout the year, your allowable deductions, all of it has been prepared for you. So yours is just to cross-check if at all the figures are matching with your P9 form, and that will be it. You just go ahead and click submit, and that will be it. And that is why at this time of the month, normally last year by now, we were having very, very long queues of people queuing, because now of the ambiguity that comes in with the filing using the P9 form. But now we are getting very short queues, or none at all, because now with the simplified solution that we've come up with, we are getting very, very short queues or none at all in all our service centers, including our Huduma centers around the country. And then also we have Shuru, the chatbot, Shuru, the chatbot. You can also be able now to file your return comfortably using Shuru. And it's a very cool kind of feature, very interactive, and very easy to use. If you if you fall into that category where you're just getting to declare your employment income only, then Shuru will be the perfect platform for you to use to file your return. That's a very cool feature. So again, for the turnover tax, these are for small enterprises. If at all you are having a startup, you're just starting your business, turnover tax is the way to go. A very, very simplified kind of obligation, where now, if at all you're earning 1 million up to 25 million in a given year, this is the right obligation for you, because it's just 1.5% of your gross sales, and that will be it. And it's also a final tax, and you'll get to file it on or before 20th of the following month, and you'll be done with it. If at all you have difficulties, and especially for those guys who have difficulties in keeping records, record keeping is difficult for you, and you don't probably have the income or the financial muscle to probably hire an accountant or an auditor, no worry no more. Turnover tax is the way to go. Just do 1.5% of your gross sales in that particular month, and that will be it. And then also, just as a reminder, get to file your turnover tax on or before 20th of the following month, just for accountability, and also just to avoid unnecessary penalties and interests coming your way. Yeah, the following persons are not eligible for turnover tax. So if your business income is above 25 million, then you should be opting for the annual regime. And also, if you're having a rental income, um, also, yeah, you're supposed to be opting for the annual regime. And then also, if at all you are a consultant and any other income subject to a final tax, then you're supposed to be on the annual regime. Why? Because you'll benefit more on the annual regime because of the expenses that you'll be declaring rather than the turnover tax. So that is pretty much it for the turnover tax. And then we have this other CGT that is now the capital gains tax, 15% on transfer of property. If at all you have property that you've transferred or sold, CGT is there, and it's also a final tax. It is usually payable on after 20 days upon the transfer of that particular property or shares. And then also we have the significant economic presence that is now for non-resident persons, and also for the guys who are in the digital marketing or digital economy a kind of space. Then now we have our rental income, monthly rental income, or MRI as we call it. This one is just also one of the simplified taxes, and it's usually at the rate of 7.5. And if at all you're earning 24,000 shilling in a particular month, then this is now the right obligation for you if at all you have residential property. And that is usually an equivalent of 288 per year, and up to 15 million. So if you're within this particular threshold of 288 to 15 million, then MRI is the right obligation for you. That is now the way to go. It's a final tax as well, and it's applicable for both individuals and businesses who are residents of Kenya. So if you're a non-resident, then yeah, and you have property, then you're just supposed to do withholding on rental income, and that is a final tax, and that will be it. But now for the non-resident, the rate is a bit higher because it's at 30%. So, and then of course you can always opt to be under the annual regime, if you so wish, because now if at all you again want to claim your expenses, then you can always wish to opt to be on the annual regime, and you can just simply do this by writing to the commissioner for that particular kind of request. And then again, when it comes to rental income, what I normally say or advise our taxpayers is that whenever you're into that regime, and probably you are doing renovations for your properties, and now you're not getting that income as it should be, or you're getting anything below 24,000 in a particular month, then it is the right as a taxpayer to just opt out for the time being. And then now when the renovation is done and now you're getting anything above 24,000, then you're supposed now to continue filing your particular return. And that is why education is always important, because sometimes you get people getting into their pockets to file their return because they feel like if they've been filing their return and now they're not getting the income anymore, probably they're afraid of being called upon and being asked why and whatnot. And then also, for example, if you have properties and in that particular month you did not receive rent for one reason or the other, then probably the most right thing for you to do, you can file a return, a nil return, because you did not receive any income whatsoever in that particular month. And then now when you get to receive the income from the property the following month, then you now go ahead and declare what you've earned for that particular month. So don't be in limbo or in a confused state whatsoever, and you get to dig into your pocket to file or pay probably taxes from income that you do not receive. Remember, again, in KRA, we say we only tax what is right, what is gained, what is gained. So if you have not gained anything, then you don't have any business paying, because now you're paying from what source? What source are you paying from? So that is very, very important for you to note when it comes to payment and declaration of your taxes when it comes to filing. Then again, of course, you have VAT. And a VAT is charged by VAT registered taxpayers only. So if at all you have been registered for VAT, then this is a tax which probably you should be able to take very keen consideration on. So in as much as is it's an indirect tax, and all of us pay VAT in one way or the other. When you go to your supermarkets, your shops, and whatnot, you get to pay VAT indirectly, but also it is accounted for the VAT registered taxpayers only. So the threshold again for VAT is usually up to 5 million within a particular year. So a person who has applied or expects to supply valuable goods and services whose value is 5 million or more within a year is now required to apply for VAT. So the time for filing VAT is on or before 20th of the following month. It is a monthly return, and now you're supposed to take note of that so that you can be able to avoid unnecessary penalties and interest coming your way. So that's pretty much it for VAT. And then now we go to emerging issues for VAT. Of course, the most important thing here is just invoicing through Teams and eTIMS, and then registration for VAT. Nowadays, we've really, in the spirit of cleaning our tax register, we made it a bit bureaucratic, for lack of a better word, because we realized that we'd only want those taxpayers who are in active business only for them to be registered for VAT. And why are we doing this? So that we've in the past we've been having so many issues regarding VAT, because now you get a taxpayer who has registered for this VAT obligation, and in maybe in 6 or 7 months they have not been getting any kind of business transaction, and especially for those who are having their VAT obligation for the sake of getting tenders from county governments at the most are the most taxpayers who fall victim of these, because now whenever you're not getting any business as expected or as projected, then you'll probably forget to file a return, and the penalties for not filing VAT are usually very, very high. It's 10,000 per month. So we not want you to be incurring these kinds of penalties when it comes to VAT, and that is why we had to make this very tough decision to really vet our taxpayers who have applied for VAT, so that we only get to pick the guys who are in active business, so that they cannot be forgetting to file their VAT, and also save them from the headache or pain of paying very hefty penalties whenever they miss to file their return. So you can imagine you're filing an nil return and you file it late, then you incur a penalty of 10,000. It doesn't make sense at all. So it would be good for you to be registered on VAT if and only if you have a very active business going on. And then also the issues of special table came in, because now we wanted to get rid of missing traders. The missing traders phenomenon was a great pain, and also in the spirit of cleaning our in the spirit of cleaning our tax register, we had to make this very painful decision of just getting to deal with the issues of missing traders phenomenon. So, and then again, of course, we have excess duty. So, excess duty is just a duty which is usually imposed, or especially for the manufacturers, and also for the guys who are in particular service industry, and especially the financial service industry, the banks, and also circles and what have you, and also the money transfer platforms, the M-Pesa, the Airtel Money, and so on and so forth. So excess duty normally applies to such categories. So the most common category of taxpayers who are usually registered for excess duty is usually the water bottling industry, and also the soft drinks, cigarettes, alcoholic beverages, fuel, and motor vehicles, and other fee charged on financial institution. As I had mentioned earlier, you have your banks and your circles, and that's a particular financial space. So excess duty is usually named as sin tax, because it's usually a tax levied on luxurious goods. And the luxurious goods now would include the soft drinks, the alcoholic drinks, cigarettes, and such kinds of products or goods, which are usually manufactured. Because you can do without your soft drinks, you can do without your alcoholic beverages and cigarettes, and that is why excess duty comes in, because now it also comes as a way of kind of curbing the use of such kinds of goods because of their health hazards. So luxurious goods and also cosmetics, because for us to because they have negative desired effects when you use alcohol, tobacco. They can have serious health effects, social and also economic effects to the consumer, and that is why we'll get to levy excess duty on such kinds of goods. So yeah, so excess stamps also is required for such kinds of goods, and especially the goods, accessible goods. And excess stamps is just a type of revenue stamps which is usually fixated on some of the accessible goods. Whenever you have your bottled water, you should be able to see the excess stamp, which is also comes as a mark of quality, and also just to show that the product that you're consuming is a genuine product. You can also find them in alcoholic beverages and also cigarette packs, just as a caution. And also excise stamps also comes as a way where taxpayers who are under this regime get to account for excise duty. So we have also EGMS. It is just one of the system where you get to track the goods, and also from our end, we'll get to track the goods, and also taxpayers are able to account for their stamps using the EGMS, that is Accessible Goods Management System. Now, what are some of the common mistakes that taxpayers get to make when it comes to filing of their returns, especially now that we are heading towards that direction? We are all preparing ourselves to be filing our returns. Number one, missing the June 30th deadline. So this is a very common mistake that we normally see, and last year it was just catastrophic, because now when everybody now comes to file their return towards the end of the deadline, that is June, because for a long time, most of our taxpayers normally think that 30th of June is now when you're now supposed to file your return, which is a very big misconception that we've been having for many, many years in the past. And that is why when it comes to now, 30th June is now when everybody wants to log into the iTax portal. Everybody's now crowding the offices. Everybody's in the Huduma Center queuing, long queues, because now of this very common misconception. So when does filing really begin? So whenever it hits January, because now we normally allow you 6 good months to file your return from January up to now June. So whenever January hits like this, it's another time for you to be filing your return. You don't have to wait up to June 30th June for you now to come in and file your return, because now if everybody is now getting to log in, of course the system will be jammed, and now it will be creating a lot of chaos. So be on the lookout, be on the know, and that is why we are always doing this sensitization, just for us to remind our taxpayers, file your returns on time, and you should, so that you can be able to even avoid the penalties and interest that come with late filing. So of course, for income tax, the penalty is 2,000 or 5% of the tax due, the principal tax due, whichever is higher. Avoid these unnecessary penalties. But then again, maybe just to caution you, I don't know how many of us have gone through the Finance Act of 2026, 2027. We've done a proposal. If at all it will be passed, we have done a proposal that now going forward, filing of nil returns should be by January 31st. Be very, very clear. Let us be very, very, very clear on this date. If at all the finance bill will be passed, then we are going to be allowing our taxpayers who are filing nil returns to be filing their nil returns by January 31st January, because really 30 for you to file a nil return doesn't take much. There's nothing much you're waiting for. There's nothing much going on, especially for students and those guys who are just starting. There's really nothing much. If at all you've not transacted in that particular year, then there's nothing much you're waiting for. You're not waiting for a P9 form. You're not waiting for your accounts or your book of accounts to be done and whatnot. So there's really nothing for you, that you're waiting for the next 6 months up to 30th June for you to file a nil return. So if at all the Finance Act will be passed, then going forward, filing of nil returns will be by 31st of January. And then for those guys who have employment income only, filing of returns will be up to March 30th, that is 31st March. Filing of employment income will be up to 31st March, because we have simplified the process for you. Everything has been done. All the data has been done for you. The return has been pre-filled for you. So yours is just to check with the P9 form and then just click submit and you'll be done. So you don't need a whole 6 months for you now to file a return by June 30th. And now and then now for the rest of the business community, the ones who have limited companies and partnership, and the guys who are sole proprietors but they're into business, then now them will be allowed to file by now 30th of June, because we come to appreciate that they will have to get probably their books done, their records, their expenses, everything, their bank statements, their M-Pesa statements, in order for them now to be able to file a correct return in that matter. So please take notes of that. If at all the Finance Act will be passed, then those will be the new dates for filing. But for now, let us stick to 30th of June. File your returns on or before 30th of June for you to avoid unnecessary penalties being levied upon you. And then failing to file your returns. If now you are supposed to file your return or even a nil return and you don't fail, then um, penalties will be waiting for you. So it doesn't take much for you to file a nil return. File your nil return on time if at all you'll be filing, or any other kind of return, be it business return, file it on time so that you'll be avoiding such unnecessary penalties and interest. And then eTIMS and non-compliance. So we with between November to December of 2025, we gave out a public notice just to alert our taxpayers that going forward, eTIMS will be now mandatory when it comes to claiming your business expenses, because now eTIMS, we have been onboarding our taxpayers for eTIMS since the year 2023, and now we are on the phase now where we call the enforcement phase. Now we should be able now to enforce eTIMS invoices by now validating them against the expenses that you're claiming in terms of business expenditure, just for us to also curb tax cheats and also get to expand our tax base. And then, if your declared expenses are not captured again on the eTIM systems, then they'll be rejected. But now, when it comes to this, and that is why we are here in this room today, just to update you. If at all you're caught off guard, and maybe this came in as a surprise for you, and you didn't have your eTIMS transactions in order, worry not, because now we also introduced the manual and eTIMS invoices, whereby if at all you are caught unawares with the eTIMS validation procedure, then you'll be now, we opened up the system and we'll be allowing you to claim your manual and eTIMS and TIMS invoices, which probably you had incurred in the course of your business and were not transmitted through eTIMS. So this decision came about because now we had to be a bit lenient for those guys who were caught off guard, and also we get to appreciate the fact that even some of the the government entities have not yet onboarded on eTIMS, and you can attest to that as well. And a good example that I like using, probably if you're in Nairobi and you get to park your car in the CBD, then even the basic of the basic, being given a parking receipt is usually not eTIMS generated. So we came also to appreciate that some of the entities have not, government entities have not onboarded, and we are just on the next and pushing them just to onboard on eTIMS so that everybody can be on eTIMS, so that it will be easy for businesses to be able to be claiming these business expenses in a very swift kind of way. And then also ignoring your side hustles is also one of the common mistake, especially for the guys who are in employment. You're also supposed to declare the same. So I'm being told my time is really, really running, and think also I'm coming to the end of the presentation. Maybe just as a recap, when it comes to validation of income and expenses, have your eTIMS in order and teams in order. Have your records in order, and then also your sales, your pay as you earn variances. These are just some of the probably issues that will trigger a compliance audit, or even a compliance check being levied upon you. So just check your records, check your sales, check your sales variances, pay as you earn, and also withholding income tax, so that you don't fall into that category whereby you will be being called upon for an audit being levied against you. So, and then again, of course, with the validation of income and expenses, these are just some of the expenses which have been exempted from the exercise of validation of income and expenses. You have your salaries, your wages, your imports, your investment allowances, airline passenger ticket, your interests, and then also fees charged by financial institutions, and so on and so forth. So you can refer to this when you go to Section 23A of the Income Tax Act, and all has been listed. So going forward, these are just some of the issues just to note, even as I wind up. Um, Going forward, businesses are encouraged to give out their the carrier PIN numbers. If at all you want to claim business expense, whenever you want to purchase an item and you want to claim it, give out your carrier PIN number so that it can be transmitted through the integrated dashboard, and then also insist on being given an eTIMS receipt, a proper eTIMS receipt, whenever you want to claim your interest, you want to claim your expenses, so that they can be transmitted through the integrated dashboard, and you shall be able to claim it in a very comfortable way. Then when it comes to tax audit and compliance triggers, just quickly on this, inconsistencies between your declaration and bank receipts, that is one of the ways you can be able to be trigger carry for you to have a tax audit. And then mismatched sales between probably VAT and income tax. And then also amending your return downwards, it's also a trigger. Filing late and also not filing late, and also not filing your returns at all is also a trigger, because whenever you don't file your return, it's a red flag. It's a red flag on our side, because we'd want to know what is the problem. Are you finding it difficult to use the iTax portal? And those questions usually come in with other questions, because now we'd want to know what exactly are you doing in terms of business that you're not able to file your return. And also unreasonably large expenses which have been claimed would also get to trigger a tax audit. So just be very, very keen on these few triggers, and you'll be okay. So I think with that, coming to the end of the session, and these are just some of the measures that we've been put in place just to support our taxpayers. Of course, we have a dedicated department called Micro and Small Taxpayers, just for our micro and small taxpayers, where now we are going to, or we'll be giving very, very personalized services to this particular group of people, because we want to encourage you to be very, very compliant, and we are there to support you. We also have simplified tax systems and procedures. We have really simplified our solutions with the integrated iTax dashboard. We have the eTIMS. We have the turnover tax, MRI, also the income tax employment only for the employment for the employees who have employment income only. We have really, really simplified our processes. We have Shuru, the chatbot, where you can be able to perform various KRA services on the Shuru chatbot. And then also we have enhanced and revamped our tax education and outreaches, just as what I'm doing here. So right now it's almost 9, and I'm here doing taxpayer education. So just to facilitate and promote tax literacy and awareness to taxpayers. And then also we have tax incentives and also business support. We have our Huduma centers and also our Ushuru Mashinani initiatives, where all these have been set in place just to support our taxpayers. So I think with that comes to the end of my presentation. I've taken a little bit of time, but I think it's the best. It's for the best and for the good of the participants who are in this call today. So with that, I bring the session back to the moderator for further instruction. Thank you.
Oh, wow, that was quite an elaborated presentation. Thank you so much. Can we applaud? Thank you, guys. Thank you for the applaud. If I could just, we had initially scheduled to finish at 9, and that is in 3 minutes. If I could just kindly request we add 10, no, let's say 15 minutes more. I will make, let's say 20 max, so that we can have room for Q&A, if that is okay with the group. Kindly do not leave. So I would want to do just a quick 10 minutes, some of the burning Q&A, two ways we can do it. I had seen some questions had been coming in the chat box. I will read them. Also, if you still have some questions, you can put them in the chat box and I will see them. One way. Two is you can, God, why am I struggling? Oh, here's a chat box. You can also put your hand up and then I will see you and then I will cue in for Maureen. So as we wait for that, I had seen a question in the chat box. Yeah, I had seen a question earlier. Brenda had asked, if my business is registered as a limited company with a sole director, is filing my personal tax return sufficient?
Yes. If at all you as a you have a limited company, so you're not supposed to. You should not forget to file your now personal return. Because now you can also be an employee of that company, or in a way that you normally pay yourself. So if at all you pay yourself, then you're also supposed to file that particular return. Now you as an individual, as the director of that particular company, so you'll be filing two returns: you as an individual, and then now for the company itself as an entity.
Okay, thank you for that. There's some questions on eTIMS as well. Mary Stone asked, which is a very relevant question when it comes to eTIMS, especially because it's still very new as a mandatory for business people. She asks, many expenses are not captured by eTIMS. Even KPLC, we don't get an eTIMS. Mama Mboga has no eTIMS. Most suppliers don't have eTIMS. I'll also add some of the Ubers and the taxi services don't have eTIMS. How is that being considered? I've just added that in terms when it comes to filing the returns and all that?
Okay, yeah, that's a very good question. And regarding eTIMS, we've really encouraged most people in business to have to really adjust. We'll have to make a really big adjustment in the way of doing business. It's not going to be business as usual, because now if you're planning to claim your expenses, then eTIMS will be very relevant for you in this particular kind of space. Now, taxi hailing companies, the Uber, even the Uber borders, you'll have to also kind of adjust the way you do business, because there's this particular, I think they have a particular option of the corporate option where you can probably engage them on a monthly basis. So you can like sort of contract this particular kind of taxi hailing transportation, mode of transportation, so that you can engage probably one company, and then they should be giving you, they have onboarded on eTIMS, that one I can say for sure. But now, if you use the corporate option, then um, you can be able to be getting your eTIMS transmitted receipt at the end of the month. But now we also appreciate the fact that most of the businesses probably would go with the common boda boda ya kawaida, and that has already also been taken care of, because now if you get to check the integrated iTax dashboard, and also just your normal iTax, you should be able to see where you can be able to claim the manual and eTIMS receipt, because we had to be very lenient just to accommodate mama mbogas, the border borders, matatus also as well, who have not onboarded on eTIMS. So there's a way you can be able to claim an eTIMS receipt if at all you have not been given the proper receipts. But now going forward, probably next year, we'll be able to see the up to what percentage of these sectors or industry have onboarded, and then probably we have another conversation altogether. But still, eTIMS has the reverse invoicing option, where you can be able to prompt the person you're buying from for the reverse invoicing, and you should be able to get a proper eTIMS receipt. So I hope, for Mary, that answers your question.
Mother asks, still on eTIMS, that's another question from Mother. What of businesses that issue eTIMS yourself but don't pay or take 150 days to pay? What do you do? And also another, just still on that question, she also asks, what of countries that refuse to pay yet the sale was declared? Can you reverse?
Yes, there's this particular option for doing the same, because you'll have to use the option of issuing a credit note. So with the credit note, you should be able to take care of such kinds of scenarios. Thank you.
All right, thank you so much. Vicky had the same question, and then she also had a question on, are you having a tax amnesty this season?
Mm. Um, no, for this season, for this filing season, I can say no. But now, if you get to read the Finance Act very clearly, by the way, it has some very interesting things, and I think, yeah, tax amnesty is coming back. That one I can say for sure. And that is, if at all it will be passed. Again, let me put a caveat there so that you don't say Maureen said tax amnesty is coming, and then it does not get passed through the parliament, and then you said Maureen lied to us. So, subject to it being passed, then July 1, that is July 1, 2026, there should be amnesty, and it's going to be for, I think, 6 months, if I'm not wrong. Yeah, we had that sensitization being made for us today. We were taken through the entire through the entire Finance Act today, and I can tell you for sure, tax amnesty is coming. So yeah, but now subject to, that's a caveat I'm putting, and I'm putting it bold, subject to being passed by Parliament. So let's cross our fingers, and yeah, it's a good thing. It's a beautiful thing. I can say for sure that amnesty is good. So, if at all you are in the category where you filed your returns late, so worry not. It will come, and please make sure you take advantage of it this time round, because again, we are not sure if it will come again. There's also good things in the Finance Act if you get to read it very well. I can say that for sure. Good things are coming, so watch the space.
All right. Thank you.
Mhm. Mm.
Kevin had asked. Also, if you have some questions, please, you have 4 more minutes, so kindly drop them in the chat box. I think that's the easiest way to do it. We will not have any hands up. Just drop them in the chat box. There's one I had jumped. Kevin Minor Paliju, he had asked, which tax obligation do I fit in as a limited company if my transactions stroke sales fall below 200K annually?
So if you have a limited company and you have 200K annually, then you can opt to have either you can just stick to corporation tax, that is the IT2C or income tax company, or you can just do, because you also have turnover tax for companies as well. So yeah, that's really below the threshold, and you can fit either on turnover tax or just stick to income tax company, that is IT2C. But with that, I don't think there's really much that you're going to be paying at the end of the year. Yeah.
Okay, great. They've given a thumbs up there. Satisfied with our response. And then if you scroll down, there's a question from a username with an Oppo. They ask, why are the eTIMS non-VAT invoices not populating in the downloadable form? How do we get the data you have?
Yeah, yeah. So the items, okay. Um, Non-vertible invoices populating on the form. The downloadable form. Okay, why are items non-VAT invoices not populating on the downloadable form? How do I get the data? So I think that probably will be an issue with your Excel sheet. But then again, I would like to probably that is an issue that I would like to maybe deal with it with you in person, because I've not heard of such an issue. So probably could be an issue with your Excel sheet, but maybe we'll have a side chat with you so that I can be able to diagnose the issue in a more informed way. Yes, yes.
Okay, thank you. Next one is Mary Stone. She asks, if we can't claim expenses due to lack of teams with our suppliers, explaining we are in a remote area, can we pay the 1.5% TUT monthly and be done with the taxes?
Yes, yeah, exactly. And that is why TOT comes in handy, especially for the guys who are in the remote areas, and you're not able to, yeah, because we appreciate the fact that also guys in the remote area, I mean, the most of a good percentage of them have not really onboarded on eTIMS, and we appreciate that as well. So I think here the best obligation for you would be turnover tax, because now it will not warrant you to be keeping records, and also really being having to deal with the issues of eTIMS receipts. So 1.5 of your gross will be okay, and it's usually a final tax.
can I just add, thank you for that answer, and this is Mary Stone calling or speaking right now. Can I just ask, is there a cap on that for the annual to be able to do the TOT? I wasn't sure on that for your annual income.
Yeah. For TOT, the cap is usually between a million and 25 million in a given year. So if at all you fall into that category of 1 million to 25 million in a given year, then turnover tax will be perfect for you.
All right. Thank
Thank
you.
you so much.
Okay. Thank you. Thank you for your question, Mary Stone. Jacqueline asks, if I have a house that I'm not living in, I've rented it out and getting rental income equivalent to the house that I am renting, am I expected to pay rental income?
Yes, if at all the house your if at all the house you're renting out, you're getting anything above 24,000 in that month, in that particular month, then yes, you're supposed to. It is deemed as rental income, and you're supposed to pay the rental income on it. So if it's above 24,000 in a particular month, then yeah, you're supposed to make the payments for it. Get registered and pay for it.
All right, thank you. I think we have addressed Kevin's question. And then Judy says, sorry I joined late. Is it a better option to take the option for paying taxes monthly based on the income received per month to avoid this kind of rush and the difficulties in getting eTIMS invoices? Yeah.
I'm trying to get. Is it from Judy?
Yeah, it's from Judy.
Is it better? Is it a better option to take the option of paying monthly based on the income received? Yeah. So what I can say, what my feedback will be to Judy will be, um, your obligation, you being assigned an obligation by KRA, it's not based on the rush to file your return or the difficulties in getting eTIMS. It's usually based on the nature of your business and also the threshold which you have met when you're doing your business. So for us to what informs us on the obligation you're supposed to be assigned is purely based on the threshold on the income that you're getting and also on the nature of your business. So I took the attendees in this room through basically all the obligations and what it takes, and also the threshold that will be met for you to be in that particular obligation for you to be given. So we don't assign obligation based on the fact that you want to beat a particular deadline, but it's we assign obligation based on how much you're earning and also the nature of your business. So I went through TOT, I went through rental income, I went through the corporation tax, VAT, excess duty, and all those kinds of obligation, and also the threshold for you to be assigned. So I hope that answers your question, Judy.
All right. Thank you. We also have Anne who's been pleading with us in the chat box asking, please, I need clarity on withholding tax. She wants you to talk a bit about withholding tax.
Yes, I had mentioned earlier, withholding tax can be deemed as final or not final depending on the nature of your business. So I said also that let's say for example you're in employment and then also you're doing some other maybe consultancy. Let me just be very specific. Maybe you're doing consultancy on the side. So in whenever you receive withholding certificates, meaning tax has been withheld. in that line of business, then that withholding tax is not deemed as final. Why? Because of the nature of your business. And I categorize withholding tax, which is deemed as final, and the ones which are not deemed as final. So the ones which are not final would include consultancy, commissions, especially for those guys who are into sales, and also the insurance guys who get to earn through commission, and some amount of tax is withheld and is usually at the rate of 5%. We also have this a part of particular group of taxpayers who are contractors. We have contractors, surveyors, engineers who normally get withholding tax at the rate of 3%. That is also not final. Withholding tax on VAT 2% is not final. And then also now, the ones which are final is usually for the guys who are normally investing their monies in money market funds. You have MMF, you have your T bonds and T bills for the government, T bonds and T bills. And then also the guys who are earn their income through SACCO, that is SACCO dividend. That one, for those ones are final. And they are usually withheld at the rate of around 10 to 15%, and that is final because you really don't have any expenses that you're incurring when your money is sitting at the bank and you're earning interest. So, what kind of expenses are you? I think on a lighter note, that is, what kind of expenses are you incurring when your money is sitting in the money market fund and it's earning you a bit of interest? So, I hope you get the point. I hope you get what I mean. But now, contrary to that, when you're getting your commission and your let's say for example an insurance agent, of course there are these other expenses that you incur the cost of transportation, you incur the cost of airtime, accommodation. You want to sit in a hotel, you want to maybe to entertain your client, you're taking your client for a coffee at Java somewhere, and you've incurred that particular cost of buying coffee for your client so that you can entertain and probably entice the client to buy your product. So you will have to claim that expenses when now it comes to you filing your return. So that is now how withholding tax is comes to play when now it comes to filing your return. I hope, Anne, that is clear.
All right, thank you. We are coming to the very tail end. I think we have two last questions. She says, "Okay, thanks, I get it." Wait, let's see, someone had asked. I think this was a follow up. I think it was that one. It was a follow up. How about a negative figure as an income tax resident, but all the returns are filed timely?
Yeah, when you get a negative figure, then it means, and especially for guys who have VAT, then it will mean that you're up for a refund, and also your VAT would also mean a credit. You're on a credit position, and a credit position is usually comes by when you have more purchases than your sales. Then it will be you'll be having a credit position, and that is why whenever you have VAT obligation and you have a negative figure, and you have a negative figure, and that will either mean you're on a credit position or you're due for a refund. And but also even for the income tax, and you get a negative figure, it will mean that you're due for a refund for one reason or the other. So probably the most common reason for you to be getting a negative figure and you're employed would normally comes in whenever there is under taxation from the side of your employer. So that would warrant you over taxation. So whenever you are overtaxed, then because now we normally say in taxation, you only pay the right amount of money, nothing more, nothing less. So when you're overtaxed, then it will mean you'll have to be refunded the overtaxed amount that you were deducted from your employer. So I hope that answers your question. But now a negative figure is a good thing on your side. So you should not be worried about the negative figure.
Okay, thank you. Well, we've closed the Q&A session, so no more submissions. We're going to take the two final questions that have been submitted from Yolanda and then from Unix, and then please kindly do not enter any other question in the Q&A. I've just done a text there saying we've closed. So the two ones that are in the chat box, Monique asks, suppose I misplaced the receipt for my expenses for eTIMS.
So if you misplace, then it will be very, very unfortunate. But then again, to just to curb the issues of misplacing your receipts and the entire issue of record keeping, and that is why we came up with eTIMS, because now you wouldn't have to worry about keeping these records, because I mean, it takes a lot for you to be keeping records for an entire year. Sometimes maybe you could be moving from one resident to another, and in the process of moving, you can misplace some of these receipts. So it's a bit hectic for you to be keeping the manual receipts, and that is why we came up with the integrated iTax dashboard, whereby all the transmitted transactions are being you can be able to see them in real time, getting them getting displayed or being transmitted in real time on your iTax dashboard for you now to be able to claim the same.
All right, thank you. And then finally, from Yolanda, she asks, what are the most common tax compliances for SMEs, and how can business owners avoid penalties as they scale their operations?
Yes, I think, and that was that was my last one of my last remark. File your return on time. Um, file Make sure you file a return in the first place. Avoid And then file your return on time. File a correct return, and you'll be on the right track. You'll be considered as a compliant taxpayer. And then also file a return correctly. If at all you're declaring your income, declare the correct income. Do not under declare your income, and then also do not overstate your expenses, because it usually comes as a compliance or audit trigger. And if at all you follow those few steps, you'll be on the right track to be a compliant taxpayer.
All right. Thank you. Thank you so much. Thank you so much for just generously being here, sharing all this info about what Care is doing and where we stand as business people and also just as citizens. I mean, I'm just, why is the chat box? No, not the chat box. The emojis. The emojis should just be going pew, 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 with the reactions and just uploading. Asante sana, Maureen. Thank you so much for the presentation. And now we're 24 minutes past what we had promised. And just before we just wrap up, if you can just plead with us, just give me 5 minutes, just 5 minutes as we wrap up, just to remind us who we are and where we are. Please just give me 5 minutes before we officially close down. If you've joined us, thank you for joining us. If you joined us during mid session, we are FOWEK, that is the Federation of Women Entrepreneurs in Kenya, and we are a members association, women for women entrepreneurs in business and associations of women in business in Kenya. I will not read through every single slide because I don't want to lose most of us. But if we can just, yeah, thank you so much. Thank you, Rahab. So we are, like I said, we're a membership association. And if you're here, if you just heard about us and you're keen to be part of our association, and one of the mandate based on just what we had today is capacity building and empowering and enlightening our members. And what they request for is what we are able to put together as a team and present. Example A is the tax training that we had today. It was a requested one from our members, and we were able to partner with Carrie to bring it on board. So if you want to be part of us, these are some of the membership categories that you can join in. We have the individual membership, the Amani and the Zuri category where you can join us. This is basically based on where you are positioned in business. If you're a newbie in business, early stages, wanting a bit mentorship, then the Amani one will be for you. If you're a bit seasoned in business, you're looking to mentor other people, you're looking to serve, even in the board, in the associations, then so yeah, in the associations, yeah, committee, sorry, in the committees, then the Zuri membership is for you. Also, we do have the Shirika membership. This is for CBOs, associations, and also other women groups. And also, we do have a partners, founder partner, we do also have membership that is on organizations and corporates that support type of the niche that we are in, and also the corporate members. We will leave in the chat box. Rahab, kindly if you can drop our email and our phone number in case someone wants to follow up or just find out more details. And if you did register for this webinar with your email, you will be hearing from us, even as we said. Another question I saw people asking a lot was about the replay, the recording. Yes, we did record the session. We are recording the session, and you're gonna send the replay in your emails. And then from the emails also, if you got a message from us, feel free to get back to us if you have any follow-up question. And also, Maureen, before we forget, maybe you can also drop in the chat box if someone wants to follow up more and see clarity or any issues with Carrie. If you can drop it in the chat box, and they can be able to see that and see how to follow up with you. Now, also, if I know I've mentioned about our membership, and I'm doing it in a bit rush because I don't want to keep us a bit more longer than we have already been here. If you'd want to have a more tangible feel of who are these women, what is this association, what do they do, we have a hangout coming up on 19th June this month. On 19th, we're going to have a members hangout. It's going to be at, where it's going to be? Romo House in Westlands. It's going to start from 5 to 7 p.m. So if you'd want to get a bit vibe of who we are, actually this one's going to be a power table experience, and we would want to have you there. We're going to have the speakers that are on the poster if you're able to see the screen, and you're going to have a feeling of who we are, what we do once we meet as women, as we network, as we add on to each other, as we catch up on how is business. Would love to have you there. And for members, usually it's 1,000 shillings, but for non-members, it's gonna be 2,000 shillings to attend. So we'd love to have you there to just come and get a vibe of who we are, even as you consider joining us. Other than that, what I haven't mentioned maybe is that we are the official COMESA Federation of Women in Business, the Kenya chapter. And as a Kenya chapter, we represent COMFWIB here in Kenya. And speaking of COMFWIB, we have the 7th annual trade fair coming up next month, 1st to 3rd of July, and the country that is hosting this time is Tunisia. So we will be having certain presentations from Kenya who will be attending. If you'd want to attend the trade fair and you'd want to go and see what is happening within the COMESA region, what other women are doing, what opportunities are out there, then we would love to send you there or help you get more information on how to attend the trade fair and the business conference. Again, it's going to be on the 1st to 3rd of July. And if you'd want more details on this as well, our office you will get in touch with our office, and Rahab will be there, and she will share all the details with you, including the accommodations, including on maybe if you need to apply for a visa. She'll help you know how to do that. And other than that, we do have an AI training happening next month on 10th July. It's going to be a full day training. If you're in business and you haven't incorporated AI yet, fear not. You're not behind, but if you do not incorporate, then you're going to be behind. And we have an AI training that is a very it's going to be a very wholesome experience on what business people need and how to be on board, and some AI skills that every business person should be equipped. It's going to be a physical training, a full day training. It's going to be on 10th July next month, and we'd love to have you there. Maybe if you can just pin that in your diary, pin that in your note. We're going to give more details on our socials about how to register, how to show up, how to register, and how and more details on where it's gonna be. But I would love to see you there. I hope I've communicated. I know I'm rushing through because I had borrowed an extra 20 minutes and now I'm 30 minutes, but that was it. And if you'd want to call to get in touch with us again, there you can do a screenshot of your screen. Also, I know I have requested Rahab to share in our chat boxes. You can feel free to reach out to us, connect with us on social media. We are on Instagram, on TikTok, on LinkedIn, on Facebook, on X. Are we on X? I'm not sure. But on WhatsApp as well, we do have a social group on WhatsApp that is very active, and we'd want to see you then, connect with you if you're in business, or if you know someone in business, a woman in business that would benefit from being in this association. We'd love to see them. So thank you so much. Thank you so much for staying all this time. Maureen, thank you so much. Thank you to the KRA team. You've been such a great speaker today, and you've really enlightened us on matters tax. Personally, way more than I actually thought I knew. So thank you so much for that. And for FOWEK, Madam President Vicky, thank you so much for your leadership, and also for the leadership at FOWEK. Thank you so much. For the L&D committee team who are here, thank you for being such a great team player and making sure that we have activities that the whole our members and also our friends are able to plug in. And for you, all 30 of you, for being here to the very tail end and making time and staying with us. Thank you so much. You're the real MVP. Until next time, I'd want to see you in more events. Please bring a friend, whether it's a virtual one, whether it's a physical one. And until next time, kwaherini and good night.